So today I've got the pleasure of being joined by Jon Rains, who's Mott MacDonald's head of ventures. Hi, Jon.
Yeah, morning, Andrew. Good to see you.
Good to see you. Well, we've had a couple of chats on that in the past, and I thought the story you've got around your venture unit, I think is great to share with the community that we've got here on our video, our sort of channel. So it'd be great to get a brief introduction about yourself personally first, and then we'll dive into the ventures unit. So tell us a bit about yourself and Mott MacDonald to give us context.
Sure. Yeah, so I've been with Mott MacDonald about 11 years now, and I'm trained a professional civil engineer working on infrastructure projects, mainly around the UK in the utilities sector. And then a few years ago, I've been asked to take a lead on innovation for corporate for Mott MacDonald, and that's led to one of the mechanisms, which is setting up the ventures unit, generally based around digital. For Mott MacDonald ourselves, then we're a global engineering development consultancy company. We actually have a construction arm as well, operate in 150 countries, 17,000 staff, $2 billion turnover. And the general purpose around the whole company is improving social outcomes.
Excellent. No, that's a great introduction to yourself and the business to start with. So what we're going to do is go through the sort of framework that I published in my book a few years back about purpose to performance, where we highlight sort of the 5 Ps about what venturing is about. So could you kick us off with the first P about what's the purpose of Mott MacDonald Ventures? What's it there for? What's its mission?
Yeah, sure. So in mentioning the purpose of Mott MacDonald first and solving society's biggest challenges at the moment, that's a lot around climate change and resilient infrastructure, energy transition. And so what we're doing with the ventures arm is really bringing innovation into Mott MacDonald, which is supplementing what we do already. We're doing that through partnerships, and the venture side with the CVC gives us the opportunity to put skin in the game so that our partners, in this case, the startups and scale-ups, can be assured that we're in it for the long term. And we're really trying to combine a product, typically a digital one, from a startup, with our existing services to combine those for new transformational solutions.
Excellent. So the process you do itself is minority stake investments. Could you give us an indication of the sort of size of fund, number of investments per year, what sort of criteria you have for making investments in your process?
Sure. Yeah, so we've done quite a bit of research in leading up to this so that we form the right kind of partnerships with startups. So we don't want a controlling stake. As I say, we just want enough to show our interest. So typically, be around a few percent, maybe 5% would be enough to warrant a reasonably significant investment, maybe take a board observer seat, but nothing to do with a controlling stake. The size of checks typically 200 to 500,000 pounds. We make a few investments a year. We have enough capital for follow-on investments. We're also exploring LP and some wider partnerships as well. I can maybe talk about that later on.
Yeah, great. And the areas you're looking at, what sort of deal flow are you getting, and what's the sort of focus areas? I'm particularly interested in this ESG and sustainability side of things.
Sure. Yeah. I mean, we have some sectors that we define across the world, which are the typical ones you'd expect on the engineering development side. So there'd be transport, energy, water, the particular areas, and within those is the energy transition, climate change. We've actually mapped against the sustainable development goals on 17 of them, obviously 17 being partnerships, so strong on those, but really energy, transport, water. The deal flow is good, actually. With our partnerships with other VCs, incubators, accelerators, we've looked about 1,200 startups over the last 3 years. Clearly, the funnel is tight, getting down to just a handful of relationships where a startup may be interested in working with us, and we'd also be interested in taking investment as well.
Great. And one of the things I've looked at in the past, and I've been very passionate about with corporate venture units, is this transition from just doing sort of one-off investments, which are sort of like just fit into the current business model, but how the business model is changing. And, you know, I sort of see now circular economy sort of type solutions, and I'm working in a venture at the moment called Circular Oil, which is tracking the lubricants. So it's not just selling lubricants for a machine and then it's dumped at the end or burnt in the end. It's how do you track that around the process, used in the machine, preventative maintenance, returned, re-refined and resent to the user. Now, I'm sure within construction and transport, you're looking at a lot of those types of things where digital areas sort of impact. Can you give us some examples of the businesses you've invested in, which maybe sort of show the different business model, which is now shifting your core business to other things?
Sure. Yeah, I think one of the big drivers for ourselves is just reducing the carbon footprint at the full life cycle of a particular project, right from the inception side through to construction and demolition and the reuse of materials. So I think possibly the best example at the moment would be Salg. They are a Spanish startup and involved in the foundational design for infrastructure. So what they do is take the ground measurements from existing instrumentation and bring that into a clever geotechnical model and work out the strength of the foundations and the soil characteristics. What that means is for the temporary works and actually the permanent works, they can minimize the amount of material used in the first place to try and bring that carbon footprint down. So I guess that's the primary route is reducing the amount of concrete and steel in the first place from that impact. One of the other things it can do from a circularity point of view is try and combine the temporary works for strutting across trenches and digging big holes in the ground and combining that with the permanent works. And in that way, again, you by combining concrete and steel together, you're reducing the actual amount of material in the first place.
Great. And could you give us an example of one or two other ventures you've invested in? Now we're talking about process and some particular businesses.
Yeah, so I think the most recent investment is in a company called Above, which is Above Surveying. And what they do is have a drone-based, AI-based software which inspects solar assets to work out the best way of optimizing how you can convert sun into energy, of course. A lot of the solar panels these days, particularly in remote parts of the world, are in relatively inaccessible places and also extremely large, up to 100 hectares and above. And so what they do is inspect the solar panels to try and optimize the use of them and get the preventative maintenance going as well. So this is reducing the amount of replacement of solar panels by making sure they're getting the best out of those existing assets. So slightly on the edges of what you're talking about, but it's definitely about trying to stop replacement and just throwing away waste completely. And that's a very recent one. We've only made that investment in the last month or so. So it's off the press.
Good. So moving on now in the sort of understanding your thing, people is one of the central P's. So can you describe the characteristics of the people in your unit, but probably more importantly, and who they interact with within the core business, so we get this sort of synergy from the outside in? Who are the people involved in your venturing unit?
Sure. So it's a really small specialist team. There's 3 of us permanently, and then there's probably about 25 people in various parts of the world who have a relationship with. The key aspect is working with our business units and what we call the venture scouts, and they will understand the problems to be solved with our clients. And that's absolutely key, of course, is understanding the problem to be solved first. We've recently moved from us actually scouting for startups ourselves through to actually delegating that responsibility and training people up for many of my colleagues to work with accelerators and incubators and talking to VCs around the world. So that's pretty much fully delegated now. And then when it gets exciting on the relationships, they'll bring back to us on the core team. The process is really working out the challenge, then working out where there might be some kind of fit to other sales, then the engagement through to due diligence, and then through to what you'd expect through an investment committee, typically doing 2 or 3 a year.
Okay. And are you a separate legal entity, or are you part of the main group?
We're not. We actually are carved out as what we've known as a region. We've got 4 geographic regions and 1 construction arm, and then we're actually carved out as a completely separate region, reporting through to the managing director, but that's part of the overall group. So not a separate legal entity, but we are at arm's length to give us a little bit more flexibility on the management systems that are needed in this type of area.
Right. Oh, that's good. I do believe that you need to have some of that split and sort of autonomy, and that's, I agree with the setup you've got there. That's good.
Yeah.
Partnerships, now you touched on it briefly in that there. Do you invest in other funds? Do you tend to co-invest alongside other investors? What's your sort of partnership relationship in the?
Yeah, so we have partnerships with probably all of the areas of a typical ecosystem around this. So venture capital, accelerators, incubators, clients, universities, and actually some of our competitors in some cases as well. So all of the suspects that you would imagine. I think the key relationship we've got actually is through the venture capital partners. The reason for that is that there's already some pretty good quality deal flow with the VCs, and we can provide a complementary skill, which is over the due diligence and is this a problem to be solved potentially at scale. So we've got a pretty good relationship with VCs around the world on exactly that kind of conversation. And then we're sort of patient capital and in an evergreen fund to have us kind of as a top up as a minority investment at the end. So if we can do the due diligence and we can get access into a few deals, it's pretty good relationship. We are broadening out over the rest of this year and exploring being a limited partner in some bigger funds. So that's really, we've sort of learned the ropes over the last couple of years and are starting to step up into maybe making investments in as an LP later this year. And that's based around large infrastructure projects, probably co-investing with our competitors and collaborators in that supply chain.
Excellent, great. And the final P coming around the thing from purpose to process to people to partners is performance. So how do you measure your performance in financial returns or strategic insights? What's your sort of performance metrics?
Sure. So we've got kind of an 80-20 balance split between 80% on the strategic, because we're a strategic CVC, 20% on the financial. It's not strategic to lose money, as they say. So we've kind of got just a 1x target is if we just wash our face and get our money back over that with the time value of money, we'll be relatively pleased about that. Although if we can make more, that's great. But the emphasis is on the strategic value, which for us is combining startup products with our services to create new transformational solutions, which are new forms of revenue streams for Mott MacDonald at scale. The targets around that are multi-million-dollar revenue streams over a 5 to 6 year horizon. It takes a little bit of time to put those through. And as I say, 1x return on the fund, which is a few million, but it's primarily on revenue. We're also quite interested in the reputational stories to genuinely be innovating within the ecosystem globally, as opposed to just talking about it. And we're reasonably confident we've got some good stories coming through.
Excellent. No, that's a fantastic overview of your overall venture unit. And any sort of reflections on the way the industry is going, the way that venture investments going, startups are going now in these sort of unusual times that we're in? Have you got any general thoughts before we close off?
Yeah, I think from my perspective, there's a huge amount of opportunity in this space. I think people are genuinely looking towards fully professionalized innovation services as opposed to just the marketing aspects around that, and people are actually rolling up the sleeves and getting stuck in. The other reflection, I guess, is that, and this is fairly traditional, is it generally takes a lot longer than you think, and maybe the benefits are even more than you in the future. So sort of some traditional ones there, but it's a lot of hard work, a lot of fun, and potential to make quite an impact in the world, actually.
Yeah, no, I think your passion has come over from that, Jon, in our discussion now, but certainly from the previous discussions I've had with you and what you're doing. So really appreciate your time and sharing your insights and sharing your story. Thank you.
No, thanks for the opportunity. Cheers.